The US dollar stages a big rebound with better economic data. Here comes another huge week with the NFP data eyed. What does this all mean for the dollar? Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So the US dollar in the latest week has ended its consecutive weeks of losses that it was encountering after. Remember, we went over in that previous video how the three pillars were supporting the dollar to the upside at the commence of this year. And pillar one, economic data was solid. Pillar two, inflation remained sticky. And pillar three, the FOMC were keeping rates higher for longer in order to bring down inflation. And remember how we went over, look, if you look at my chart here, in around late June, start of July, the dollar started eroding because those three pillars were starting to wear off that was supporting the greenback to the upside. We've seen a slowdown in inflation. We've seen a slowdown in economic data in terms of it beating expectations. And we've seen the FOMC leaving the door open, wide open for numerous cuts still to come in 2024. And those are to start in September, obviously this month of September. And those are the three things that have been weighing on the dollar. Now, if we have a look here, I said to you guys, this is going to be pivotal, us reversing the 2024 move, you know, what we'd seen, the gains that we produced at the start of this year. And the fact is we've paired those back and now we formed a decent amount of support around this sort of 150 mark. You can see the bouncing coming into play there last week. And I did note, didn't I? At the start of the week, we were very likely to see a bit of dollar weakness, okay? A bit of dollar weakness, bit of dollar consolidation. And then towards the second half, the latter stage of the week, we'll see that rebound in the dollar. And we saw exactly that. Now, if we just take a look at the calendar last week, I just want to refresh your memory here and look at the data points, okay? Here, consumer confidence on Tuesday. And I said, look, if we've got a confident consumer, that's good for the economy, right? If the consumer's confident, they're going to be out spending the money, you know, stimulating the economy. They're going to feel good. It helps, right? It contributes. Then more importantly, on Thursday, and I said, I wouldn't be surprised if we get a decent number. Look here, quarter GDP, quarter on quarter, the prelim reading coming at 3%, beating expectations of 2.8%, higher than the previous, bullish. And then we look at the GDP price index, and this is inflationary, guys. This is the prices of all the goods and services that make up that GDP number, elevated at 2.5% there, higher than previous, higher than expected. Again, that's dollar positive. Now, focus was on the Fed's preferred measurement of inflation, which is core PCE. Now, that came in line at 0.2%, which is still somewhat sticky. But the key thing here as well is to note personal income. You know, income for consumers, it's still decent, higher at 0.3%. Personal spending, higher in line with expectations, but higher than the previous 0.5%. And in Chicago PMI data, solid 46.1. So remember one of those pillars that was eroding, that was killing the dollar from middle of this year, coming under some pressure there. One of those was economic data softening, right? Well, this improvement in data that we've seen in the latest week helps the dollar. So there's a couple of things, right? Improving data, that pillar sort of coming back into play, if you like, somewhat. It reduces it calms a lot of the concerns. You know, markets were worried about a US economic slowdown, potential recession. It calms those down. But then technically we were somewhat oversold for the dollar. You got to remember, I stress this all the time. The dollar is the reserve currency of the world. You know, a big 90-something% of businesses, countries, you know, economies, central banks, all this, they do business, they do operations in dollars. Dollars is the reserve currency of the world, right? And then you got to remember as well, the dollar is still a safe haven. The dollar is still attached to the largest economy in the world, right? So, you know, we're not just going to keep selling the dollar. At some point, we're going to have a bounce. Now, obviously, big focus on this week's, we have the non-farm payrolls numbers. It is jobs data week. This is labor market. We're going to keep an eye on ISM manufacturing PMI, which is expected decent. See how many job openings there are. And this all comes ahead of NFP, bear in mind. We've got the ADP, which is the privately conducted payrolls. We've got unemployment claims, and of course, non-farms. Now, if you look at average earnings, they're expected to pick up here, which is inflationary, 0.3%. If we're getting paid more money, what do you think we're going to do with this more money? We're going to go spend. Stimulate the economy, stimulate prices, i.e. inflation sticky. Amount of jobs being added, expect 164,000 jobs being added to the economy. Unemployment rate expected to come back down to 4.2%. So this round of numbers are expected to be bullish for the economy, dollar positive. Now, when we focus on FOMC, now I want you to really listen to me here, guys. Markets want 50 basis points cut, right? That's what they want. They always want more because 25 basis points is 100% priced in. We know that's happening. That's old news. So if Jerome Powell, if the FOMC just delivered that 25 basis point cut, what do you think is going to happen to the dollar? It's going to rally. Now, the meeting's on September 18th. And if you look here, there's still a probability that we're going to cut by 50 basis points, just 30% probability, but the possibility is there. That's what the markets will want. If we just cut by 25, as I say, that's dollar bullish. So if you ask me where I see the dollar going, I still see as potential of pushing to the upside. When we look here, the next major area of resistance is eyed at this psychological 103 mark. So we've got every room to go re-challenge that and see what we do there, guys. So a big week once again for the US dollar. Expect plenty of Canadian dollar loony volatility this week because we have a central bank decision from the Bank of Canada where they're expected to cut rates by 25 basis points. Now, guys, remember, we've been going over this for weeks, right, in terms of the vulnerabilities around a Canadian dollar because the Bank of Canada are one of those central banks that are moving quite quickly and remain pretty much dovish. They've left the door open to cuts. Inflation has been softening. Growth in the economy has generally been slowing down. So we are ready for more cuts, which obviously is a CAD negative. Now, obviously, it's priced in that we're going to get a 25 basis point cut. It's just how dovish are they at the decision? Are they going to leave the door open to more cuts? I think they could very well do so because inflation, as I say, has been coming down. If you look here, let's just bring up those previous CPI numbers. This is all about building a picture, guys, because you've got to get ready for a potential tone. Okay, what are we expecting from them? We've seen, if you look, let's got these last Canadian dollar CPI readings, CAD readings, and you look here, look, inflation coming down quite substantially there, coming closer towards their 2% target. Now, fast forward again, obviously for this week, CAD, just quickly before we round off on the Bank of Canada, look here, 0.0%, so zero growth on the Canadian GDP number. So GDP is softening. If you look at the previous number, it's also revised lower from 0.2 to 0.1%. So this really gears us up for a potential dovish central bank from them. When we look at dollar CAD, obviously, I always say, look, you can look at CAD versus other peers. I'll just always go over this on the base case versus the dollar. Now, obviously, dollar CAD has been one of those currency pairs that's been in an awful range for quite some time. Okay, since October 2022, we've been caught in a range to the upside of 139 to the downside of 132. So it's pretty narrow range when you look at it. I think this week, depending on how dovish the Bank of Canada are, which I believe they will be, obviously there's a lot of volatility with dollar as well. But if we get that dollar recovery continuing, obviously this, and we get that dovish Bank of Canada, maybe we can finally get room to potentially break out to the upside from this range, or at least go and re-challenge that to the upside, okay, and look to break out. So for me, the only way I'd be interested in dollar CAD, I think I've said this before, right, in a previous video, is if we eventually, look, you could look at this as potentially a big, you know, bar this little, I mean, look, let's just put the trend lines here, okay. There we go. Okay, we can look at this as a potential bullish pennant. Either way, it's a narrowing triangular structure. So maybe we get room for a potential test here, this lower acting trend line around just sub 134, about the mid 133 region. And if we do get a dovish Bank of Canada, we could look to push and go and re-challenge the upper part of this range. And it would leave the door open for a big bull move. Okay, if we get that divergence growing, i.e. the Bank of Canada cutting faster than the FOMC and that dollar, you know, recovery further strengthening in CAD coming under pressure, this should break out to the upside. So keep an eye on the Bank of Canada rate decision. And lastly, to round off with the Australian dollar, obviously Aussie dollar has been a great talking point right now, plenty of volatility. And one of the reasons for that is because the central bank is somewhat on a bit of a divergence to other major central banks. You know, the RBA are entertaining the idea still of, or the possibility of rate hikes, where other central banks, we've been going over this, where other central banks are cutting. These guys have left the door open still to hikes because inflation remains sticky in the Australian economy. And how do we bring down inflation? We hike rates. Now, if you look here this week, we're going to keep an eye on GDP. It's expected to pick up to 0.2%. If the Australian economy still remains buoyant, they're going to keep the door open still to rate hikes if inflation remains sticky. Because if you look here, just want to show you the last Australian dollar CPI reading. Okay, Aussie dollar CPI, just bring it up. Okay, so that was on, oh, that's just recent. That was last week. Look here, elevated, 3.5%, still not slowing as fast as what the markets want to see. Okay, so when you look at AUD, again, as I always say, you can look at AUD versus other peers. There's some outperformance when you look at Euro Aussie's been falling, GP Aussie. You know, there's other pairs. Aussie CAD remains somewhat elevated over recent weeks, and Aussie does have an edge still versus its peers. Now, a bit of a slowdown here, potential reversal given a stronger dollar. We are at a heavy area of supply around this sort of 68 area. we are subject. It is one of the better performing currencies versus the dollar, but we are potentially subject to topping out here. Looks like we are topping out. Potential room for a pullback in towards sort of 6700. Obviously, that would very well be intensified towards sort of 66s if it's the next major psychological area and decent zone here, as you can see, just looking left, look. And maybe we really pare back this upside trend if obviously that GDP number is softer as well, and depending on how much of a pace of recovery the dollar's seeing. Okay, so again, just to round off, plenty of volatility. We're just being blessed at the moment with market fundamentals. So much moving in the markets right now. Exciting times. Other than that, have a blessed and amazing week, and I'll catch you on the next video.